Hey, good morning, everybody. Jason here. Happy Thursday. Looks like we're in for a bit of a red day today. Um, I right off of open, I actually just bought some protective short-term puts on Tesla since most of my account is looking for Tesla on the upside, but we had a pretty good downtrend yesterday, so I went ahead and bought a couple 630 puts. Just short term, basically spent $400 on some protection to the downside. Um, we sold out of our iron butterflies and the condors yesterday, took profits on both of those. Just kind of looking at the overall, the overall downtrend. And I bought the puts, of course, first thing in the morning, like right when market opened, and then of course it went up, so they went against me quite a bit. But now I'm a little bit happier that I actually purchased them. Actually down only $22. I think for a little while we were down. They were only 50 cents, so I should have probably grabbed a couple more. But that's just the way it is. So we got rid of everything that was expiring this week and took our profits on those. That's pretty much the only thing we have. Of course, a 795 call that we have expiring, and then I'll just hold on to those puts just in case we see another pretty good slide today. Did listen to the majority of Jerome Powell today. I don't think it was very telling one way or the other, kind of already what we heard yesterday and previously, like what I pretty much expect. So just looking at next week, we basically the only things that I might consider moving out are these 660 655s. I actually probably should get on to moving those guys out if I feel like, either now or that would be one of my choices, or I can just hold on to them knowing we have earnings coming up here in a little over a week. Yeah, July 26th, so it'll be shortly after that. So if we see some run up, should be pretty good, but we only have a couple of those. And for the majority of the rest, I'm feeling pretty good. Some 600s and some 630s. Even if we get a little bit more downtrend for the near term, I think closer to those dates we'll see uptrend. And then the week following, we're positioned pretty well. We have 600s, 685s. Not worried about many of these really at all. I did open up another long condor. You can see my mid-strike prices are 675 and 690. Paid $58 for these with a maximum upside of that'd be $442 to the upside on these guys. Thinking by then we should be in the upward territory, unless just broader market and kind of looking at the S&P just continues. If it continues this downtrend, then not looking so hot. If the overall market is not looking so pretty. I did open up. Let's take a look. I opened up yesterday a Netflix Iron Condor 480, 580 are our short strike prices. Grabbed a $190 credit. We grabbed two of those, and here you can see the strike prices. It's only a $5 width on those. And I grabbed an Amazon as well, which Amazon looks like it's on a bit of a downward trend. But these are also expiring quite a ways out, August 20th. And what I wanted to achieve, and the reason I opened up a couple more of those, was based on an interview I recently watched with Tom Sosnoff. And if you don't know who he is and you're trading options, you probably should get to know him. He made the Thinkorswim platform. He made Tastyworks, so pretty big deal. And if you listen to anybody anywhere at all, and take what they say is actual fact, that would be the man. So one of the questions in the interview, somebody asked him, hey, if you have a strategy that's been working for you, you grew your small account into medium size or big account, whatever, like what should you be doing? And his answer was broadening out the underlyings, and by that, and he did clarify, not like widening strike prices or anything like that, or getting less risk, but adding more underlyings to what you're playing your strategy on. So over the course of the next month or two, I want to rotate a little bit into some other underlyings other than Tesla. Obviously, that's been my main play. 90 some percent is all on Tesla, and then of course I just hold a lot of their stock in this account. So that is the primary reason for me grabbing a couple of those other plays, and I'm going to continue to do so. I actually have I have a shorter term one. Let's see. We have one on Snap here. Very small. And then, of course, I've been playing the ones on the S&P, just anytime we see a good dip. And this looks like it's probably going to be another point where I'm going to grab another one. And I'll grab it a month out just to put credit spread at the money, even though we're seeing this bit of downness. Overall trend has just still been pretty up. Generally at the money, you are able to receive a third premium for the collateral. So break even is being right 2 out of 3 times, and if we're right 3 out of 4 times, then it's profitable. I also do, of course, have the option of rolling these out at any time, and I think that's very good with something like that index. The only downside to playing it is the premium is pretty low if you're further out of the money, but I feel pretty comfortable playing at the money with the S&P with that amount of time. So, and it looks like we'll end this video showing you being down about $3,000 yesterday. I believe we were down at the end of the day about 8. I'm hoping that these 630s don't actually print too much, because that's gonna be pretty down, but they're actually positive now. But if we happen to hit down a little farther towards those levels, that'll at least preserve some of the capital. All right, guys, hope you have a great day. Love you. Let's make a lot of money.